Can the media leave Tesla alone? I honestly find that the media does control a stock price. For example, with Tesla, earnings came out, wasn't so good, but the stock didn't drop on the same day because of earnings. Usually when a stock drops because of earnings, it takes that big drop that same day. But Tesla is just dropping slowly day after day. I mean, if you look at the past month, it was trading at 293 at the highest, and then slowly, right now it's trading at 235. Yes, there's the issue with the SEC, but it's just funny how all the bad news come out all at the same time. The Tesla car exploding or catching fire, the issue with the SEC, Elon Musk and Twitter, earnings. Well, obviously earnings is not media related, but it's funny how all the bad news just come out at the same time and just affects the stock considerably. Look at this stupid article that came out April 24th. Tesla should be valued at less than $100 a share, investor says. So just perfect timing, really. All these nonsense articles come out, and I'm sure it has an impact on the retail investor. I mean, if a lot of people read these things or see these things, it's going to affect the Tesla stock because it's supply and demand. So if there's more supply than demand, then the stock will drop. And if you can affect or control the supply and demand for a stock, you're basically controlling the stock price. Now, of course, it's hard to value Tesla because it's not really profitable right now, but you can see that revenues are growing, so they're on track. So of course, if you just look at the PE ratio, since it doesn't have earnings, it's actually definitely overpriced because it's not even making money. But I mean, many stocks out there are not making money yet, and they've got a price. They're trading on the stock market, so you don't necessarily have to be making money to be valued or to be worth something. It's the potential of future cash flows, the vision, the projection, that also adds value to a stock, the story behind the stock. So when Tesla was trading close to 400, investors liked the story of Tesla. And now the closer they're getting to being profitable, now the stock is going backwards. So it really doesn't make sense. That's why I really think that the media is controlling the stock price, coming out with all these bad news all in one shot. And Tesla closed at 235 today, but after hours it went up to 237 because news came out that the SEC, Elon Musk and SEC finally reached an agreement. That agreement is not out yet, but they reached an agreement, so that's good. Elon Musk reaches deal with SEC over Twitter use 19 minutes ago. So that probably explains the small jump here. So at the end of this video, I'm going to tell you which trade I would personally place on Tesla. I mean, there's several trades you can place depending on your position on Tesla, what you think is going to happen. So here's what I think. First of all, I'm not an expert. I'm not good at predicting the future, but I do agree that the success of any business relies on three things: product, people, and process. Product. Now, if you look at product, now you cannot deny that Tesla has an amazing product. Very well marketed. The design of the car is amazing. The performance of the car is amazing as well. Battery life is amazing as well, 370 miles in one charge. Usually most electric cars or hybrid cars, they won't go more than 100 kilometers after one charge, and they need fuel. It's got an acceleration of 0 to 60 miles per hour in 2.4 seconds. That's ridiculous. You need like 700 horsepower in a regular car just to get that. So you're getting an electric car that goes from 0 to 60 miles per hour in 2.4 seconds. So that's a crazy acceleration. The interior is so luxurious. It's so quiet. So really, the more we talk about it, it's just, you can't deny that the product is amazing. So we don't even have to go into details. The product is there. They have the product. And the sales prove it. Look at the revenues going from 2015 to 2018, from 4 billion to 21 billion. And you've got other car companies now competing with them. You've got NIO in China doing basically the same thing. You've got other car companies who are trying to come up with their version of 100% electric car with a high battery range. So we know the product is good. Now you've got people. So people, yes, maybe Elon Musk is a little crazy, but definitely it does take a little bit of crazy to be creative and to come up with something revolutionary. And part of being an important trait of an entrepreneur is not being able to follow rules. So that's obviously something that Elon Musk has. Does not like rules, does not like restrictions, does not like regulation. So he's obviously having an issue with that, but it does not mean that won't know how to run a successful business, a profitable business, does not have great ideas, and that the end product isn't amazing. So the little issues he's having here and there with the SEC or anyone else or any other regulation body, it'll just be bumps in the road. But when the media keeps talking about it and exaggerating it or just putting emphasis on it, then of course it's going to affect the stock. But it's up to the investor at the end of the day to know what to ignore and what to listen to. So in my opinion, all this is just noise. What really matters is product, people, and process. So product is amazing. People, it's there. Just needs a little bit of control. The right people on board is there. And the process, of course, I don't know what the exact process is, but a business needs to have an efficient process in place so that they're not wasting money manufacturing or moving things or shipping things. So you could have great product, great people, but if you're doing things wrong, spending more money, wasting money, then at the end of the day, the business is not going to be profitable. Now, I'm going to assume that a business that's making 21 billion a year in revenue has a good process in place, or can at least afford an expert consultation if required, in order to improve their process to make sure it's the most efficient, and that there's no spoilage or wasted money anywhere, and that they're doing things fast and not wasting time. So based on that, I have total confidence in Tesla. So that's my opinion. I have total confidence in Tesla. I just think what's going on right now is just noise. It's just distraction. It's just a buying opportunity. So here's the trade that I would make with Tesla. So I'm no longer a swing trader, but if you are a swing trader, I think this is an excellent opportunity to buy. Even if some people say that, even if this article says it might drop to 100, it's just noise, it's just distraction. But definitely long term, it's going to go back up. Don't know how much time it'll take before it goes back up, but it will go back up. It doesn't pay dividends, so while you're holding the stock, it doesn't do anything. So for that reason, because it doesn't pay dividends and because I don't know when it's going to go back up, but I do trust the company, I don't mind putting money in the company or investing money in the company. So if you're a swing trader, I think this is a good buying opportunity. But the trade that I would personally make is I would write a covered call. So to write a covered call, I would have to buy 100 shares of Tesla. So obviously it's going to be expensive. It's going to cost me $23,000. So if I buy 100 shares of Tesla, let's say at $235, I would immediately sell, let's say May 17 call option at the money. So it's trading at 235. I would sell at 235. And look at this. I would collect $12.65. I could even go to June 21st just to collect something higher. So I'd go for June 21st, look at 235, collect $20.65. So I'd buy the stock at 235, 100 shares. So 20.65 divided by 235, that's 8.7% return in 8 weeks. So from now to June 21st, that's 8 weeks. 8.7% divided by 8 times 52, just to annualize the return, that's 57% in 1 year. So I could buy the stock, 100 shares at this price, sell the call option at 235, make 8%. And here's the thing. If the stock come expiry date, so come June 21st, if the stock is below 235, well, I'll still own my shares. I made 8%. I collected $20 per share from the stock. And depending on where the stock is trading at, let's say it's trading at 230, 225, 220, I won't care because I just collected $20. I just reduced my cost by $20. So by buying it at 235 and then collecting $20, my true cost is actually 215. So even if the stock is trading at 215, I'm not going to care because I already collected $20 up front. Now I would prefer for the stock to stay at 235 so that the $20 I collected, I can see it as profit. But I'm just trying to cover all the scenarios. So if the stock drops to 215 or 210, I'll still hold my shares at 235. I collected $20 as income, or whichever way you see it, either income or a way to reduce my cost on the stock. Following month or after June 21st, I can sell another call option expiring in July. Now, if the stock is trading at 210, of course, I'm not going to get $20 again at a 235 strike price. I'll probably get I'd get I don't know, $5, $10 per share if I want to stay at a 235 strike price. If the stock goes up come June 21st, if it's trading above 235, well then my shares will get sold, but I would have made 8% in 8 weeks, which I'm okay with that because annualized that's 56%. So basically I'm just trying to benefit from this stock dropping. I'm comfortable putting my money in it because I know that most likely it's got a better chance of going back up. But even if it goes down, I'm getting downside protection when I'm selling a call option of $20. So another trade I would place it's an option trade. It's called an iron condor. So I don't even have to buy the stock. So I don't have to put up 23,000 in order to buy the stock. I just have to sell the option. And basically all I have to do is, so if the stock's trading at 237, I could sell options at May 31st, expiring May 31st. And I just have to assume or guess in what range will the stock be trading at come May 31st. So I could say that come May 31st, I don't think Tesla's going to be trading above 290, let's say. given that it's trading right now at 237, I don't think it's going to be trading above, let's say 280. And then I can buy, so I'm going to sell the call option at 280, and then I'm going to buy the call option at 285 for protection. This is called the credit spread. And I'm going to do it on the other side, on the put on the put side as well. So I don't think Tesla's going to be below, is going to be trading below, let's say 200. So if we look at the delta, so this is the probability that the stock actually trades above the strike price that I chose. So here it says 15% probability that it trades above and 10% probability that it trades below. So I want to be safer, so I'm going to go even further. So let's choose 290, and then 295 on the call side. And then on the put side, we said we had 10%. So let's go 190 and 185. All right, so now probabilities, we have 10% chance on the call side and 5% chance on the put side. So if we go back, so this is how much I can collect from placing this trade, which is an iron condor. So I can collect anything in between 59 and $1.22. So basically the least I can collect is 59 cents, but I can try to get something in between. So let's say like 90 cents. I could probably collect 90 cents on this trade. So all I'm saying with this trade is, regardless what happens with Tesla, whatever it does, up and down, I don't care. As long as it stays above 190 and below 290 come May 31st, I will make $90 on a $410 investment. So I will make $90 divided by 410. I'll make 21% in a matter of 4 or 5 weeks, as long as Tesla stays above 190 and below 290. I don't have to put up anything up front, I'm just risking $410 investment, but I'm getting back $90. And the $90, I'm getting it right now because I'm selling the options. Now, if 2 weeks go by and Tesla's still trading at 235, what's going to happen is I can close this trade because I sold it. I'll have to buy it back to close it. So since I sold it and collected 90 cents, I can buy it back and close it at, let's say, 45 cents. So I would have made $45 in a matter of 2 weeks without having to put up $23,000 to buy the stock and without having to guess the direction of the stock, but only assuming in which range it's going to be trading in, which obviously is easier than guessing the direction of a stock. So yeah, these would be the two trades that I would personally place on Tesla: either buy 100 shares of Tesla and sell a covered call against it, or place an iron condor trade and collect 90 cents or $90. So this is if I sell one contract, but I could sell 5 contracts. So that would be $450. That I'd be collecting $450 premium upfront. And as long as Tesla stays above 190 and below 290 come May 31st, I keep that $450. And at any time between now and May 31st, I can close the trade and maybe buy it back at, like, let's say $200. So I still make a $250 profit without taking much risk. So yeah, these are the two trades that I'd be placing on Tesla. So if you have any questions, any comments, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. If you want to receive trades like this, trade ideas like this, as soon as I place them live, I'm starting this WhatsApp group where I'll be sending out my trades live as I place them during the day for only $10 a month. So if you're interested, check out the links below. And it is tax season. If you're looking for an accountant to do your taxes, don't hesitate to message me. Link will be provided below as well. Thanks for watching.